Hey traders, Raghee here. Happy OpX Friday. Great to see everybody. We've been gearing up for sort of the second half of the month where we've already had a handful of swing trades that we managed into this week. And right now, only Schwab remains open. We have those 19 September 92 and a half. So we're going into today with a lot of free capital. And, it's interesting when you don't have a lot of open entries into a really nice swing trading window, it provides a lot of mental bandwidth and financial bandwidth that we can put to work. And we think about timing as traders. We finished up we did a class not too long ago, some of you might remember, for long-term account growth. And whether it's long-term account growth or whether it's looking at our swing trades, one of the biggest myths on Wall Street, and it's meant to disempower you and I, is you can't time the market. And that's not true, right? I can't predict the market. I'm not going to talk about where prices will be at the end of the year, but we can use probabilities to time when there will be opportunities to put trades on, right? So timing is not prediction, but timing is absolutely looking at the calendar and saying, hey, on certain events, we're going to see certain types of price action. And what makes OpX unique is because it's not just a day. It actually provides insight into price. Now, that's going to affect our day trading day as well. So as we get into day trading, I probably won't do as much today because I want to make sure we have plenty of time to set up our swing trades. But the day trades that we'll be looking at will be affected by this as much as anything else. So if I'm taking a look at the SPY here this morning, let's go ahead and jump on over there. If I'm taking a look at the SPY here this morning and I'm looking at those August 15s, yeah, there's a lot of size here, right? And we're trading at 644 right now. What are the chances we get much above 644 to 645, knowing that between the two, there's over 54,000 open interest? Now, is there as much need to get down to 643? It sure wouldn't hurt, but then getting down to 640 may not be all that realistic, right? If we're at 644, it's not out of reach, but I know the win, right, for traders, for institutions, whomever, right, who have written, sold premium, the win for them is if price stays as close to 644 or even a little bit lower. And then we say, all right, we're going to go back to our three. There we go. We're going to go back to our three main setups. We're going to talk about those a lot today. What are the three main setups for swings? Daily price movement range, wave, and Darvis. By the way, what are the three main setups for day trading? Hourly price movement range. We go right back to those price movement ranges, right? The PMRs. So HPMRs, Darvis, and wave. So if you can master those three, there's not a single type of market environment that you won't be able to take advantage of. If you master just one of them, say you get really good at price movement range trading, everyone is really just sort of one setup away from turning the corner. What hurts most traders is rather than three core setups, they've got 33 core setups. They've got too many things that could happen. And what happens eventually is they're in conflict, right? OpX is a great opportunity because we can take those three core setups and they're in harmony with this sort of price probability of moving down to certain levels. And that's why I get really excited about it. Now, it can be challenging as a day trader because what looks to be a breakout or a breakdown could really just be preempting the move to that level. Now, remember, OpX is about Friday and really Friday alone, although we've seen some of the wackiest price action of an OpX week that I've likely seen all year, right? All year. And so during summer, when things can be a little lower volume, a little lower participation, price can act a little bit more unusually. Let's do the same breakdown for the Qs, right? So basically right now, everything is above the previous session close. But how much is it going to take for the current 579 level? Let me get my drawing tools over here. How much is it going to take for our day trading morning, right? For the NASDAQ to get down to, so here we are, 579, which is right here. So how much is it going to take to get to 575? I don't know that that's probable. I mean, certainly if we can sink lower everything at or below 579 on the call side will lose value. And that's a win too, right? So if you've sold the 575 puts and we even just creep down towards that level, the value of this option will go lower. And if you sold premium, and I don't sell premium, but I'm absolutely aware of the effect, right? But really anything below 580 is a huge win. All of these options are already very low value. And if we are cruising below 580, even these, as the day ends, as Friday wraps up, will continue to lose value. So this is sort of that guiding principle of we're looking for a dip. Mostly OpEx is going to favor our dip buys. And then we're going to look for those 3 core setups, and we're going to get a little bit more insight, an additional layer of insight because of the influence of the third Friday of the month. So it's a really cool time for swing traders. And, you can see how excited I am. All right. So let's get on over to the IWM, do the same thing as we get ready for our day trades. And let's go ahead and get into that. All right. So IWM. So once again, we're going to start with where are we right now? So that puts us right about here. Yeah. Now you might say, Rog, you're focusing on the call side. Yes, because if you look at the open interest and we're to, add it up, there's more here on the call side than on the put side. Now, some of the put implications are there, but not as great because the size is what dictates where the attention is going to be. If price were to move down to 227, these 228s will lose value. 227s will start to lose value. If we move down to 226 or even 225, which is only 3 points away, again, you can see how that will just sweep. Think of it as sweeping it just right into the dustpan, right? This will just sweep these right into the garbage. And again, it doesn't have to be zero, right? We're not looking for zero. I'm looking for anything that would lower the value because that's the win. If you've sold an option for $5 and on the day of expiration, it's worth $3, that's a $2 profit. Now, you might say, Rog, how come you don't sell premium? Well, two reasons. One, I'm a directional player, and this is all about direction. We're going to buy calls into these moves. But two, I think this is probably overlooked for a lot of retail traders. You need to have a different amount of money in your account to sell premium, and you need to have a certain margin account over 25,000 to not limit yourself to three trades per 5 trading days. That's really limiting. What if we just started off the week and said, look, you're allowed 3 trades? And that is sadly what most margin accounts under 25,000 are sort of shackled with. So for a lot of traders, it's just unrealistic. But once you understand the timing of buying calls, for those of you that say, Rog, I know you haven't done it, and there's a reason. You don't really need to. But if you want to get to that level, the same timing and the same core setups I'm teaching you will help you if that's where you want to go with your trading. My argument is you really don't have to. Directional calls and puts work, right? They really do. If the timing on buying those calls or puts is, well, in line with a lot of the things we talk about. So pretty cool in terms of the day. That's going to give you an idea of what we're looking for. And the same thing will apply as we go through the morning. If you're thinking, Rog, what could happen to Apple? This is going to apply to stocks too, day trades or swing trades. Got to open up the current open interest, right, on the third Friday. Now, remember, when we set up our swings, I'm not buying August. Obviously, I'm not buying the August 15, maybe August 29, because I want to be at least 2 weeks out on my swing trades. Ideally, that's September 19, because that's where the open interest that's expiring today, all that money and all those contracts, once that's done, where do those traders then go start selling premium for the next OpEx? It's going to be the third Friday of September. So that'll be where that open interest and attention migrates to. And that's likely where I'm going to be looking for the next set of swings. So if I take a look at Apple, for example, we're at 232, right? Ooh, that's really loud. Sorry about that. There's the bell, by the way. We're at 232, so roughly here, right? Is 230 out of the question? Not at all. Now, if 230 on a daily chart sets up one of our core 3 setups, that's exactly what I'm looking for. Is it likely we're going to head above 235? No way, right? These are already losing value. These will, as the day progresses, and if price does not stay above 232.5, will continue to lose value. And if 38,000 open interest is within striking distance, watch how quickly we start to migrate there. Now, the one thing that we cannot account for, this is data, by the way. The one thing I can't account for is news, right? Let's say there's political news. Let's say there's geopolitical news. Let's say there is Fed speak, right? Fed speak and political chatter have peppered the week. We know it's created all sorts of chaos to the up and down side, mostly to the downside. So you might say, Rog, what's the probability of today's action when you look at the indices? It is for a little bit of weakness, right? And that's even before I've looked at the chart. And let's go ahead and jump on over there. I do want to remind everybody that we already had core retail sales, which isn't a huge data point, but it does reflect some of the resiliency of the consumer. And it didn't send prices higher or lower. We've pretty much been stagnating because, frankly, OPEX is going to be a whole lot more important than core retail. Also, and take a look at the move lower. We've already said what's most probable. Yes, moving towards those strikes. So we can see the ES. Look at that move lower. NQ is doing the same thing. IWM, not quite. We can see it on ES and NQ. The other thing that we want to be aware of is the 10 a.m. University of Michigan. It's the preliminary number. I don't anticipate, again, that being a big mover. Probably the most volatility we're going to see is on those wild cards of whatever the political speak or Fed speak of the day is. And we've got a little bit of that, I think, almost every day this week, which has made it a little bit challenging. All right, so you might say, Rog, if we reach an HPMR or DPMR this morning, if it's in line with open interest, yes, we can look at it. But remember, just as we've been looking at open interest for potential support levels on our swings, remember, on the other side, we know certain thresholds are not going to be broken to the upside. For example, if there's high open interest at a lower level, that's support. But if there's high open interest at an upper level, that's resistance, and price won't want to break up through it. So we can see where we're going to be sort of stuck on a day like today. And if you've traded through OPEX before and you've noticed that price tends to stay in sort of a really fixed range, it's often a choppy day. Now you know why. It's the data behind the open interest. All right. So any questions on that before we get into our morning? And I'll look at some of the intraday till probably about 10:05. This is usually not a great day trading day, to be quite frank. Look at NASDAQ right now. So just take a look at the QQQ and NQ right now. We're heading down towards a Darvis. Yeah. And it's only 3 minutes after the bell, so I'm not really interested in doing anything quite yet. But if I take a look at that Darvis, the only way that would make sense is when I go back on over here and take a look at the Qs at 578. Would I look at this as an exhaustive level where, price could sit here? Chances are, whatever the floor is ultimately going to be, whether it be 578 down to maybe 575, my ceiling is at 580. So anything that I have to the upside has got to presume that 580, while it could be pierced intraday, it's likely not going to be for very long, because it's imperative that price stay below 580. So 39,000 open interest swept, right? Does that make sense, gang? So it's everything we do anyway. Darvis, price movement ranges, wave, and then we're adding in this extra level. So I think we've been preparing for this all week long. I think everyone's pretty fluent on it, but if you're not, today's the perfect day to ask. All right. And I'll be going over when we switch on over to the swings around 10:30, maybe even around 10:05. I'll review those 3 core setups so everyone has a really good idea of when we look for which is best in a trend. Here's a hint, all of them, but which can we use in a non-trending environment? So we'll get into that as well. All right, so that's a really good idea. That's really good, giving you all a good idea of, hey, if 578 holds, 580 is going to be resistance. So it would make a lot of sense to be able to get as low an entry as possible so that if we do bounce, knowing 580 is the ceiling, we're not necessarily looking at a lack of follow through. Because remember, fills get us in, follow through is what pays us. Okay, today I'm doing some green tea. I don't know, maybe OpEx's green tea. I love this. This is a matcha, gen matcha. It's a rice. There's a rice in it. It's a rice flavored green tea. Boy, is it good. And I'll tell you what, it packs some caffeine. I don't think it holds its own against coffee, but it definitely holds its own against coffee. All right, let's take a look at our charts here together. And I'm going to move the daily and the hourly aside. We'll spend plenty of time there a little bit later on. But as far as our morning goes, this is where we sit right now on the NQ, kind of hugging this Darvis. You know, one of the reasons I don't love the Darvis, and many of you probably realized already, Rag, here's our previous session close. Right there. We're on the south side of it. We're on the bearish side of it. So when we're below it, this is a tougher support level. It is a support level, but it's going to be a tougher one. And then that previous session close is going to be potential resistance. You know, we know that the highs of the morning could be potential resistance, but that's a pretty decent low. And it does seem to be holding for now. It's 9:36. So at least we let the first 5 minutes go by. Volume comes in. The spreads start to normalize. They're not, you know, when we see the opening bell and you look at the spreads between bid and ask, where the buyers are waiting, where the sellers are waiting, you could sometimes drive a Mack truck through that. And spread, by the way, adds to risk, right? Spread, by the way, adds to risk. So we could rally back up to the previous session close. We'll see what we do. But there seems to be some decent for that Darvis. But how much are we likely to bounce? That's the problem, right? Getting the fill here is fine, but how much are we likely to bounce? And that's where a lot of times day trading on OpEx is really frustrating. In fact, my old rule, if I go back even just 5 or 6 years ago, 3 or 4 years ago, is I would usually take day trading off on OpEx. Every day is not going to present good, high reward, low risk day trades. It just every day is not. And OpEx is definitely going to be one of those where we have a range and we'll probably chop around within it. But we want to focus on that lower end of the range for our swings, which is why I'd like to switch on over there a little sooner today. So we have plenty of time to set all those swing trades up and alert them out. Remember, if you're not with us through the day, you know, we're here every morning from 9:20 to 11:30. That is the schedule here in the room, where I'm setting up day trades and swing trades. But if a swing trade sets up after 11:30, remember, if you've got that Simpler Trading mobile app, or if you just have the Sector Secrets Mastery room open, you'll hear the cash register ring when I send out the alerts, and you'll also get notification on your app. So remember, even if we don't set everything up, one of the things that we'll have to be able to continue to communicate is, of course, the alerts. Day trades, I don't alert, right? There's been some question about that. Not a lot, just one. I don't alert day trades for a really good reason. It is absolutely ludicrous to think that alerts can be sent and followed away from the desk by watching the phone, right? So if you're looking at wanting to day trade, spend the hour here in the room with me. I set all these up here in the room. We put them in the notes so everybody knows what's going on. But minute by minute assessment is what's required for day trading, right? Not that I'm in and out very quickly, but if we're getting a new candle and new reads every 5 minutes, alerts could shift every 5 to 10 to 15 minutes, right? So, you know, I know most of you know that, and common sense isn't quite so common. So let me just spell it out. There's no way that someone's going to sit and compete. I have 9 screens in front of me, right? 9. And someone thinks they're going to look at their phone and put in a day trade. Good luck to them, right? I look at you all as, if I were teaching my friend, I would never recommend to a friend that day trading through a phone is in the least bit realistic. Yeah. So those are things to keep in mind. And I love to day trade, but again, I'm going to spend the hour here at the helm doing it. All right. Next up is, yeah, it's hard enough to get a fill sometimes in real time. Exactly. And what if you get an alert from me? I've already gotten in. Now you got the alert. Now you go, I'm going to get in, and then I alert out, hey, I'm out. Right? That's the kind of crazy stuff that we don't want to have to ever put anybody through. Okay, next up is bonds. I'm taking a look at bonds here. This would be looking at TLT. Now, we do have a long-term account position, so I don't want that confused with anything we're doing as a day trade or a swing trade on TLT. I don't know that TLT would be something that I would consider a candidate for a swing. I think we have far better trends. We have far better symbols that have consistency with the 5 green candles than a symbol that has no trend and a yellow candle. So this is also, as we go through the day, you're going to see it's not just about finding the setups, right? It's not just about, can we get a trigger? It's, are we getting a trigger in a thing that has a probability of moving in our direction? And we know what that looks like, right? Probabilistically, we know exactly what that looks like. It has a trend, and it has preferably 5 green. So yeah, Kelly, you just mentioned Oklo. Let's take a look at Oklo's option chain. And this was on our Monday watch list. So for those of you that want that ranking, right? Okay, Rog, what are you looking at this week? What are the next batch of swing trades? Where are they coming from? They're going to be coming from that ranking that I send out to you all, that watch list, our Sector Secrets Mastery Relative Performance watch list. That's not just a watch list. We've ranked the things that have the best probability of follow through. Now, Oklo, I mentioned, yeah, Kelly D. So where are we right now? We're at 69. Where were we almost darn certain that Oklo was going to go? 70, right? Very unlikely we get 275 or even through 75. Another 3,900 open interest. But this is a whopping 7,500 open interest. And we know that that is going to act like a tractor beam. But notice how there's very little below this, right? So Oklo could be a day trade. Oklo could also be a swing trade. So let's take a look at the charts of Oklo. Is there anything on the 5-minute chart that suggests that I have a day trade setting up? So let's go back to our core setups. If there's hourly price movement ranges running, PMRs, price movement ranges, great. I don't have them for Oklo. Is there a Darvis? We've already broken that on the way to 70, right? And is there a trend? We don't have a trend. So my 3 core, nothing there. So let's open up the daily, okay? Because we'll be talking a lot about that here today. The daily looks pretty darn interesting. I don't love the yellow candle, but I know it's a function of the mean reversion that's triggering right now. The trend is wobbling a little bit, but it's still a trend. Until I get 2 gray segments of that multi-trend, I just have an uptrend that's wobbling, not broken, just a wobble. And then I have the Darvis. I have the 70 level, right? I do want to give, look, I still want to give time. I don't want to do anything until 10:05. Let's get through that clearing range, right? Let's get through that clearing period. But yeah, Oklo is absolutely looking very interesting for a swing, not a day trade, but for a swing. We know that gravitational pull to 70, it's likely going to keep it in that area, maybe even below it. And then I'm looking for my 3 core setups, right? No daily price movement ranges, so that doesn't matter. Mean reversion, check. Darvis, check. So I have 2 setups, 2 of our core setups, along with that open interest setting up for Oklo. So when we shift on over to our swings, that's exactly the kind of setup we're going to be looking at. So that's our kind of overall assessment of what we're looking at today and how we're going to look at it. And we do this this type of analysis is perfect for every 3rd Friday of the month.